In this lesson, we will be discussing the bar chart. Apart from the candlestick and the line charts, this is a bar chart. And so it needs to be discussed because it gives traders a lot of information about price movement. And if you watch closely, you see a bar chart consists of bars, and each bar consists of open, high, low, and close. That is OHLC. We are going to explain what this means. And the open is the price at which the asset started its time period. Is the horizontal hash on the left. Then, okay, let us be representing them on chart at once. If we check very well, you see that this is the horizontal hash by the left. And for this is also the horizontal hash by the left, which is the open of this bar candle. And the high is the highest traded price of the time period. It is the top of the vertical line. And let us see. So for this very one, this is the high of the candle. This is the high of the bar, and this is the high of the bar, which is the highest traded price for the period. The highest traded price for the period. For this bar chart, you see that each candle here represents 1 day. This is a daily chart. This is a BTC USD. It represents, each bar represents 1 day. So for this day, this is the highest traded price. This is where it's opened. This is the highest traded price. This is where this opened. This is the highest traded price. Just like that. Open here, which is the hash at the left. Highest traded price. And that is why you can see the high here, 9411.99. Just like that, on all the candles, on all the bars. So this is the highest traded price, and we also have the low, which is the lowest traded price of the time period. It is the bottom of the vertical line. So to this is the bottom of the vertical line, the bottom of the vertical line, the bottom of the vertical line, bottom, 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 bottom. But that's the low of the day, or the low of the time period, depending on the time frame selected. We also have the close, which is the final price at which the asset traded at, and it is the horizontal hash on the right. So this is the horizontal hash on the right. Horizontal hash on the right. This is the open, the horizontal hash on the left, horizontal hash on the right, which is the open and the close. Open and the close. So that is the bar charts. This is the horizontal hash by the right, hash by the right, hash by the right, hash by the right, horizontal hash by the right. So these are the closing price for this time period, for this daily bar. This is the close, this is the close, this is the close, just like that. And here we say that the most important price is the closing price. And the close is the last traded done, or the last trade done within the period of your chosen time frame. It is the key point because it summarizes the final sentiment of the period. The key point work mostly with the close. Remember that we said that when price closes above the opening, simply means a bullish sentiment. This is the opening, and then this is the close. Hash by the left, open, hash by the right, close. So this is the price, representing the price. Closing above the opening makes this a bullish bar. And then this is the open and then the close. The hash by the left, open, hash by the right, close. So simply means this is a bearish bar. So this is a positive sentiment, and this is a negative sentiment. And so we can only say that this is a bullish bar when it have closed. After all the fluctuations and it closed here, that is when we can say it is a bullish bar, because it can also close below. But at the close, which is the most important, that is when we can truly say it is a bullish or a bearish bar. Remember that it mustn't be exactly like this, because we said that it can close near its high or at the high. Near the high or at the high. And that is why we can also have it like this sometimes, which is at the high. Or this can also be at the low. This can be at the low, at this very low. And if we watch closely, you will see, for example, that is the reason why we have it like this. Is a true representation. This close near the low, and this close at the high. Why this close near the high? This closed at the high. It can also, the opening price can also be at the low or near the low. This is at the low, whereby this is near the low as opening price. So you have to understand the opening and the close, which makes a bar either a bullish bar or a bearish bar, or making a positive sentiments for the period or a negative sentiment for the period. So if you look closely, you will also notice that some bars are larger than some, which is when the volatility increases. After the fluctuations during the volatility, you see that it is larger than others. So it's only in bar charts and in candlestick charts that you can see volatility. But in line charts, you cannot see this volatility. It's only in bar charts, that is here, seeing a larger bar, or in candlesticks where you see a larger candle, larger bar. But in line charts, you cannot truly say this is a volatility. So, concentrating on bar charts, you will also see that this is what some traders call the power of trade. I want to discuss here about the power of trade. What do they mean by the power of trade? Well, some also say that it is normal that you buy below the opening price or sell above the opening price. But we don't just do that blindly. You have to know what the market does and where to buy from or where to sell from. That is also relates to the power of trade. Here we can see that this is the hash by the left, which is the opening. And price have to go the opposite direction before the right direction for the day. That is the power of trade is what they call open, manipulation, distribution, and then close. Price opens, manipulates, distributes, and then close. That's what they call the power of trade. But if you check closely what is happening there, you see that orders are being picked from the previous day. Unfilled orders according to supply and demand. When the price closed for the day, you see in the following day there are some unfilled orders in the previous day where price will have to fill before it moves and close. And then the following day, it also picks orders from the previous day and then distributes into the new day. That is what you see happening in the power of trade. It opens, then manipulates. What they call manipulation is the unfilled orders being picked from the previous day, and then price drops and closes. The unfilled orders from the previous day, that is why you have the week, pick from the previous day and then drop, or the high of the day. Then you can also see where price closes here. The unfilled orders picked from the previous day before it drops. That is the manipulation for the power of trade. That is why you have a open, manipulation, distribution, and then close. We don't do that blindly. You know what the market does. The unfilled orders, and you have to mark them off so that when traders are being manipulated, our orders are being triggered. When traders are being manipulated out from the market, our orders are being triggered. So we do not just buy above the opening price anywhere, but at the zones where we have imbalances, unfilled orders left from the previous day for us to continue on the new day in our trade. So that is what we termed interception of candles in our paid courses. You call it interception. and see how it intercepted from the previous day and continued, intercepted from the previous day and continued. For this bearish sentiment, you see interception from the previous day, interception from the previous day, picking orders that are left on field for a continuation for the bearish sentiment. This is also will be treated in another lesson, but in the paid session. So, knowing about all prices, how could you now define the word bar or a bar chart? So, a bar is a single piece of data on a chart which shows the price range for a defined period of time. So, it can be 15 minutes, it can be 5 minutes, it can be 1 hour, and on this is the daily time frame, which is 1 bar for 1 day. And so, we also said that the bars can vary, and the larger the price, that simply means the volatility in price. So the more volatile the price fluctuations, the larger the bar. So I believe you learned something new today. All right, let's get to the next lesson.